Welcome to the deep dive. So right now, one single aerospace company is sitting on a backlog of contracted orders worth, get this, $271 billion.
Yeah, that is just a staggering amount of capital.
It really is.
Oh.
I mean, that is more money than the entire gross domestic product of New Zealand. It's larger than the GDP of Greece.
Right.
If you're holding a backlog that massive, you aren't just a corporation anymore. You are basically a sovereign-level economic force.
Absolutely. And keep in mind, that number isn't some rosy projection or like a best guess estimate. That is legally binding contracted future work.
Which is exactly why we are pulling apart the Q1 2026 earnings call from RTX today.
The aerospace and defense giant, formerly known as Raytheon Technology.
Right, exactly. And the mission for this deep dive is to look completely past the corporate jargon, right? We're translating these financial spreadsheets to understand the real-world physical machinery at work.
Because when one single company is tasked with building $271 billion worth of global security and commercial aviation stuff, their earnings report becomes a vital pulse check on the state of the world for you.
Yes. You're getting a direct look at where the global economy is physically allocating its most precious resources.
Yeah.
We're talking titanium, advanced microchips, and, highly skilled engineering labor.
Yeah, it's a blueprint of global priorities.
So let's start with the immediate financial reality here, because they didn't just meet their Q1 expectations, they utterly demolished them.
They really did.
We are looking at Q1 2026 sales hitting $22.1 billion. That's a 10% organic growth jump from the previous year.
And organic growth being the key term there, right?
Right, meaning what exactly?
Well, it means this 10% increase isn't just some mirage created by favorable currency exchange rates. And it's not RTX simply like acquiring smaller companies to artificially inflate their revenue stream.
I gotcha.
Yeah, this is their existing core businesses generating tangibly more output and more sales.
Okay, and the profits followed that exact same trajectory too. Their adjusted earnings per share saw a massive 21% jump to $1.78.
Which is huge for a company of this size.
Plus, their free cash flow is sitting at a really robust $1.3 billion. But, I keep getting stuck on one specific move they made in this report.
The outlook bump.
Yes. Because of this strong start, RTX is actually raising its full year 2026 outlook. I mean, in April, they are projecting adjusted sales for the entire year to land somewhere between $92.5 billion and $93.5 billion.
Alongside a bumped-up earnings outlook, yeah. They are essentially telling Wall Street that the rest of the year is already a foregone conclusion.
But that feels incredibly premature, doesn't it? Raising a full-year outlook in the first quarter?
It does seem bold.
Right, because if a company raises its full-year outlook in Q1, that's like a marathon runner predicting a new personal best after just the first mile. The global economy is so volatile right now. We have supply chain crunches, international trade tensions.
Labor shortages, yeah.
Exactly. So how can they be so confident in April about what their balance sheet is going to look like in December? Are they just being overly optimistic here?
Well, no, they aren't assuming anything about stability. In fact, what's fascinating here is that they are banking on the reality of global instability.
Okay, how so?
To understand that confidence, you have to look at a manufacturing metric called the book-to-bill ratio. RTX reported a 1.14 book-to-bill ratio for the quarter.
Okay, let's unpack this.
Yeah.
So think of book-to-bill like water pouring into a bathtub with an open drain.
Okay, I like that.
The drain is the work you are finishing and billing out, and the faucet is the new orders coming in.
That's a perfect way to visualize it. So with a ratio of 1.14, the faucet is pumping water into the tub 14% faster than the drain can empty it.
Wow.
Yeah. For every dollar of complex aerospace hardware they finished and shipped out the door, they took in $1.14 of new contracted work.
So they're bringing in new work significantly faster than they can physically complete the old work.
Exactly. And that $271 billion backlog we mentioned at the start,
That is the water that has already filled the tub.
precisely. And it's broken down into $162 billion on the commercial aviation side and $109 billion on the defense side.
So they're raising their outlook because they already hold the receipts. The demand is just fundamentally locked in across all their markets.
Right. It's highly durable demand. But, as you know, having a massive backlog doesn't mean you can actually deliver the product on time.
Which brings us to that $109 billion defense backlog. Raytheon, which is the defense focuses segment of RTX, saw their sales go up 10% organically.
Yep.
But The standout metric in this entire report is that they have ramped up their total critical munitions output by over 40% year over year.
And achieving a 40% increase in output for complex military hardware in just a 12-month period, that is a staggering logistical feat.
It really is.
We are looking at a fundamental shift in the defense industrial base.
And we aren't talking about stamping out basic artillery shells here either. They specifically name-check the Tomahawk cruise missile, the AMRAAM advanced air-to-air missile, and the Standard Missile family.
Which provides highly sophisticated air defense for naval fleets, yeah.
Right. So I have a hard time wrapping my head around that 40% number. Increasing missile production by 40% isn't like turning up the dial on a toaster factory.
No, not at all.
These are highly complex, multi-million-dollar weapons. How on earth are they physically managing to scale up manufacturing that fast?
Well, you're hitting on the core friction point of modern defense manufacturing. It's something called the bullwhip effect in supply chain logistics.
A bullwhip effect.
Yeah. So if RTX wants to increase final missile assembly by 40%, they need their immediate suppliers to provide 40% more guidance computers.
Okay, makes sense.
But then those computer manufacturers need, say, a 100% increase in specialized microchips to account for errors. And the foundries making the chips need a 400% increase in raw, processed rare earth metals, 3 tiers down the supply chain, just to get the required yields.
Oh, wow. So it's an exponential demand curve pushing backward through the global economy.
It is. If we connect this to the bigger picture, for decades, Western defense spending was heavily weighted toward research and development.
Like designing the theoretical next generation of weaponry.
Exactly. But the current global climate has forced a violent pivot from those R&D labs back to the gritty, urgent physical reality of scaling up heavy manufacturing.
Right.
Objectively speaking, to achieve that 40% ramp-up, RTX is actively expanding its physical footprint.
Yeah, the report specifically points out new or expanding facilities in Columbus, Georgia, and Huntsville, Alabama.
They are physically laying concrete, they're building brand new climate-controlled assembly floors, and trying to hire a whole new generation of manufacturing workers.
They are essentially having to brute force the physical expansion of the industrial capacity.
They are, and while they are scaling up these legacy heavy hitters like the Tomahawk, they're also having to adapt to entirely new paradigms of warfare in real time.
Like what?
Well, the report highlighted their Coyote counter-UAS systems.
Oh, right, UAS being unmanned aircraft systems. The massive swarm of drone threats we're seeing deployed globally right now.
Exactly.
And the economics of drone warfare are currently completely broken. I mean, you have state and non-state actors launching drones that cost maybe $20,000 to build.
Pennies, really, in military terms.
Right. And historically, the only way to shoot them down was to fire a Patriot missile that costs millions of dollars. You just can't win a financial war of attrition that way.
Which is exactly why the Coyote system is so critical. But what's fascinating in this Q1 report is the mention of a successful demonstration of a non-kinetic variant of the Coyote.
Okay, non-kinetic meaning it defeats the incoming drone without blowing it up with a traditional explosive warhead.
Right.
I imagine this involves, like, directed energy or electronic warfare.
Spot on. It's a total game changer for the exact economic reason you just mentioned. A non-kinetic Coyote utilizes high-powered microwave energy.
Microwaves. Wait, really?
Yes. Instead of trying to physically impact the drone, which requires incredibly expensive precision machine guidance hardware, the non-kinetic variant blasts a cone of microwave energy.
And that does what?
It literally fries the logic boards and navigation circuits of the incoming drone swarm.
Oh, wow. It just scrambles their brains as they drop out of the sky.
Yeah, exactly. It neutralizes the threat at a fraction of the cost per interception, and without the massive collateral damage of a kinetic explosion.
That is wild. It's a prime example of engineering a way out of an unsustainable economic loop.
It really is. And, the defense momentum isn't just isolated to the Raytheon segment. Over at Pratt Whitney, they just definitized a massive $6.6 billion contract for F-135 engines.
Oh, man. That is the engine that powers all 3 variants of the F-35 Lightning II fighter jet, right?
Yep, the absolute backbone of modern Allied air power.
But, okay, building 40% more missiles and taking on $6 billion engine contracts, that drains the exact same labor pool of highly skilled aerospace machinists that RTX desperately needs for their other massive undertaking.
Because RTX is a two-sided coin.
Exactly. They have to balance this massive defense industrial ramp-up with the massive logistical demands of the civilian aviation sector.
Right, bring back down to commercial flight. Collins Aerospace and Pratt Whitney make up the commercial side of the house.
And they're undergoing an entirely different kind of transformation, driven by the simple fact that people are flying again in record numbers.
They are.
And when commercial fleets fly constantly, they experience intense wear and tear. So we are seeing commercial aftermarket sales absolutely booming in this Q1 report.
And for anyone unfamiliar, the aftermarket is essentially the maintenance, repair, overhaul, and spare parts industry. It's what keeps an aircraft safely in the sky for 20 or 30 years after it initially rolls off the assembly line. Pratt & Whitney's aftermarket sales are up 19%, and Collins Aerospace is up 7%.
They specifically note that they increased their output for PW100 MRO, which stands for maintenance, repair, and overhaul, by 23% year over year.
Wow.
Yeah, they are churning through engine repairs at a blistering pace to keep the global airline fleet moving.
But this isn't just about corporate profit margins, right? When you're sitting at an airport gate and your regional flight gets delayed for 3 hours because the mechanic is waiting on a replacement part.
The worst.
Right, but that is this exact supply chain crunch impacting your daily life, and RTX is definitely feeling that friction.
Oh, for sure.
While the aftermarket is highly profitable right now, the commercial side isn't invincible. Collins Aerospace reported what they'd term an unfavorable commercial OE mix.
OE being original equipment, right?
Yeah.
The brand new parts going into brand new planes being built by Boeing or Airbus. So an unfavorable mix usually means you're selling a lot of your lower margin baseline components, but your highly profitable, complex systems aren't moving as fast.
Spot on. Because manufacturers like Boeing and Airbus are facing their own extreme supply chain snarls, they just aren't taking delivery of those high-end systems at the projected rates.
Makes sense.
And over at Pratt & Whitney, the report explicitly cites higher operational costs and the negative impact of international tariffs really eating into their operating profit margins.
So they are dealing with the gritty, frustrating, everyday reality of trade tariffs, broken supply chains, and just trying to get spare parts into the hands of mechanics on the tarmac.
Right. It requires immense capital and operational focus just to survive the present moment.
So it's a two-front war for them. They have to fix the planes flying today, like a mechanic, trying to keep a fleet of high-mileage cars on the road while simultaneously inventing the Prius of the skies.
The Prius of the skies, I love that.
Well, it's true, because here is the tension that really defines this entire Q1 report. While they are fighting those daily supply chain fires, they are simultaneously trying to fundamentally alter the physics of commercial flight.
Yes.
The report highlights that Collins Aerospace is currently testing a hybrid electric propulsion system at full power.
This raises an important question about their long-term survival play. This is a major component of the European Union's Clean Aviation SWIFT-CH project.
Okay, and the goal there is what?
The objective is to develop hybrid electric technologies to drastically reduce the fuel burn of future short and medium-range commercial aircraft. Collins is building a high-voltage motor drive system designed to integrate directly with a full-scale Pratt & Whitney geared turbofan engine.
And the target they're aiming for is a 12% improvement in fuel efficiency for regional aircraft.
But wait, 30%? Is a 30% fuel efficiency jump via hybrid electric actually realistic?
It is, but it requires a massive shift. I mean, jet engines have been relentlessly optimized by thousands of engineers for the last 70 years. You can't just tweak the shape of a fan blade or use a slightly lighter metal to get a 30% efficiency jump.
No, you can't.
They have to be fundamentally changing the underlying physics of how the engine generates thrust.
They are. I mean, you have to look at the mechanical limitations of a traditional gas turbine. Jet engines are incredibly efficient when they are cruising at 35,000 feet in thin, freezing air.
Right.
But they are terribly inefficient at sea level when they have to generate the massive brute force thrust required for takeoff in dense air.
So currently, every jet engine is a massive compromise. You have to build an engine huge enough to survive takeoff, which means you are dragging a heavier, less efficient engine through the sky during the cruise phase.
That's the core of it. The hybrid electric system solves this. Electric motors are phenomenal at generating immediate, massive torque.
Like an electric car off the line?
Exactly. By integrating the high-voltage electric motor, the aircraft can use battery power to provide that critical boost during takeoff and the initial climb.
Oh, I see.
Because the electric motor is handling the heavy lifting at sea level, engineers can shrink the gas turbine and optimize its thermodynamics strictly for high-altitude cruising.
Wow, so you decouple the takeoff requirements from the cruising requirements.
Exactly. By optimizing the gas engines solely for the cruise phase and using electricity for the climb, you unlock that massive 30% fuel savings.
That's incredible.
Yeah, in the aviation industry, a 1% or 2% improvement in fuel efficiency is considered a generational victory that saves airlines billions in fuel costs.
Mhm.
A 30% jump would completely revolutionize the economics and the carbon footprint of global air travel.
But testing a hybrid electric system at full power means this isn't just a digital simulation or a concept on a whiteboard anymore. They are running thousands of volts of electricity through physical hardware right now. Which really brings us back to the central tension for RTX. How do you balance the ruthless efficiency required for today? Managing tariffs, hiring mechanics, overhauling 23% more engines to keep today's planes flying against the visionary, extremely expensive R&D required to invent hybrid electric flight for the year 2035.
Well, if they fail at the daily grind, the airlines go bankrupt today. But if they don't make those high-tech investments now, they will be completely left behind when the industry inevitably shifts towards sustainable aviation.
It's an incredible balancing act, and it really brings us full circle to the sheer scale of what this one company is executing.
Absolutely.
So what does this all mean? When you take all of this, the financials, the defense contracts, the aviation engineering, what does this actually mean for you listening right now?
It's a great question.
Well, the next time you board a commercial flight or the next time you read a headline about an international defense deployment, I want you to visualize that $271 billion backlog.
It is the invisible architecture dictating the pace of the modern world.
It really is. RTX's Q1 2026 report isn't a story about a company beating Wall Street estimates. It is a testament to an almost incomprehensible level of global demand.
Yeah.
Whether it is keeping aging commercial jets safely in the air, ramping up critical munitions by 40% in a single year, deploying microwave arrays to fry drone swarms, or trying to crack the physics of hybrid electric flight, you're witnessing that backlog playing out in real time all around you.
And, if we look past the balance sheet, if we look past the 10% organic growth and the rising earnings per share, we are left with a much larger, almost philosophical problem regarding the nature of industrial production.
What kind of problem?
With RTX ramping up their defense manufacturing at this staggering pace and simultaneously pushing the absolute boundaries of aerospace engineering on the commercial side, their primary challenge is no longer securing orders.
Because the demand is limitless.
Exactly. The demand is limitless, the capital is readily available. The true bottleneck now is the physical reality of the Earth itself.
You mean raw materials and human capital?
Yes. How many elite aerospace machinists actually exist in the global labor pool? How fast can the mining sector extract titanium or, pull the rare earth metals needed for an AMRAAM missiles guidance system out of the ground?
Right.
How quickly can we refine the highly specialized copper wiring required for a massive, high-voltage, hybrid electric motor? We are looking at a global industrial system operating at maximum physical velocity.
Wow. The gears are turning as fast as the laws of physics allow.
The question isn't whether RTX can sell more product. The question that should linger with you is, how long can the global supply chain, the raw material extraction industries, and the human labor pool sustain this level of hyper-accelerated aerospace and defense production before the entire system fundamentally maxes out?
That is heavy.
When your backlog is bigger than a sovereign country's GDP, the limits you face aren't financial anymore. They are strictly physical.
That is a phenomenal point to end on. It's not about the spreadsheet. It's about the physical limits of the world we live in. Thank you for taking this journey with us today, looking past the corporate numbers to see the real-world machinery operating behind the scenes. We appreciate you joining this deep dive, and we'll catch you on the next one.